Today we take a momentous step, one that has never been taken before with China, toward a future of fair and reciprocal trade as we sign phase one of the historic trade deal between the United States and China. Together we are righting the wrongs of the past and delivering a future of economic justice and security for American workers, farmers, and families.
President Trump signing a phase one trade agreement with China on Wednesday, calling it a victory for American workers, farmers, and families. The trade truce with Beijing comes after a 2-year tariff campaign that imposed significant economic costs on both countries. And as the Senate took up another trade agreement Thursday, with a bipartisan majority voting to send the long-awaited USMCA deal to President Trump's desk for signing. John Murphy is Senior Vice President for International Policy at the U.S. Chamber of Commerce. Welcome back, John. Good to see you. Now that you've had a chance to look at the details of this trade agreement, which were finally released this week, how significant is this in its potential to change Chinese trading behavior?
We think it's a significant step forward, first of all, because it is going to bring back a greater measure of certainty to U.S. economic relations with China and certainty about the tariff environment. As recently as a month ago, we were looking at the prospect of tariffs being expanded to an additional $100 billion plus of consumer goods we import from China. So it's good to see that we're not expanding the trade war. As we've gone through some of the reforms that are in the agreement, we're pleased to see some that we think are meaningful. For instance, new protections for intellectual property, opening up of the financial services market. The challenge here will be to see how these are implemented in the months ahead.
Yeah, I mean, that's the big point here. I mean, I've been at this for a long time, and I mean, I don't know how many, was it 20 years ago or 30 when China promised to open up their financial services market? So in a way, I think the most interesting thing about this deal is the consultation and potential enforcement mechanism. That is, if you're an American company that's in China and you feel aggrieved that you've been harmed, you can now go, instead of just going to the Chinese regulator, you can go to the U.S. Trade Representative, and that will trigger a bilateral process of review. Do you agree?
Absolutely. Some of the commitments here are familiar. We've heard them in one form or another in bilateral dialogues for several years, decades even. But there are now going to be monthly meetings at the level of lower officials and quarterly at the deputy minister level and so on up the chain.
Right.
And Ambassador Lighthizer, the U.S. Trade Representative, has indicated that he regards it as job one here to see that these changes to the Chinese economy, that the Chinese, I think for their own interests, for their own rationale, are committing to, that they're actually implemented.
Yeah, so I guess the question I also have is, was it worth the 2 years of uncertainty and tariff imposition? Some of the tariffs are still going to be on. And of course, I mean, was it worth the price economically?
I think that's a difficult question to answer. As you say, tariffs on about $350 billion of imports from China are still there. The cost has been substantial to both economies. China's economic growth has slowed pretty dramatically. And for the United States, we just have new numbers in that in 2019, the U.S. manufacturing sector contracted by more than 1%. We've had a manufacturing recession. Right. Agriculture has been in a recession. So that's the price. And looking forward, we have to see how these measures are implemented to see, that we're going to get payoff from that.
So we should get at least some near-term relief growth as that uncertainty ebbs, I would assume this year, in the economy bouncing back a little bit. Is that what you anticipate?
We do. I think there's a number of reasons why we expect the economy to be bouncing back here. But certainly, one of the drags on the economy has been business investment has been low. And that's been in part because of uncertainty about tariffs. We see that lifting up because of this China deal and also because of USMCA. Yeah,
let's talk about the USMCA briefly. I mean, it's nice to get that finally done and behind us. So I guess you guys are also pretty happy about that, even though there is a managed trade component here, and Wage dictates that for the auto industry that generally business doesn't like. But net on net, big improvement or not?
So for most businesses and most sectors of the economy, the really good news is that free trade across North America is going to continue as it has for 25 years. We have excellent market access, and we have some modernized trade rules in areas like digital trade that are really well done, other measures to combat behind the border kinds of protectionism. You mentioned with regard to the auto sector, there are some complicated rules that are going to raise costs for the auto industry. Now, raising costs for an industry isn't usually a good way to make them more globally competitive.
Right.
Most companies are indicating that they think that they can implement this without too much cost, but the devil's in the details as we go into the implementation phase. The question is how these regulations implementing it will be framed, and we'll be on that as well.
Briefly, John, big picture, do you see this being basically a trade period of calm for the next year until we get through the election?
I think it'll be calmer, certainly, and there is something of a sigh of relief going up. Also, the threat to impose auto tariffs seems to have expired as the administration passed a deadline. So we're looking for a chance to consolidate the gains where they exist and move forward in the year ahead.
All right, John Murphy, thanks for coming in. Appreciate it.